The long journey to RDR is almost at an end. As we head for 2013, advisors have been taking exams, changing their business models and preparing for a brand new world. But is the advent of RDR really the end of the road? Or is it the start of a new journey, one full of potential for advisors who want to embrace new standards of professionalism and transparency?
January the 1st, 2013 is very much the beginning, not the end. There's a real need to engage with the consumer. I think this is the biggest change to the financial services industry, the retail financial services industry, for a generation. Advisors need to readjust and realign their business models for this new world.
And that is no easy task. Advisors have to ask themselves some fundamental questions about who they want to serve, what type of business they want to run, and where they can deliver the most value for their clients.
5 years ago, houses such as ourselves, asset managers, were all about just selling funds, and that cannot be the case going forward. It's got to be working in partnership with intermediaries.
The future relationship with partners will become more professional. It won't be based on remuneration because the advisor will be agreeing the remuneration with the client. So it will be much more of a partnership in coming up with solutions to meet the client's needs.
For asset managers like Blackrock, it's about adapting our models to help our clients serve their clients, the end consumer, that much better. People need help to invest, and that's where we can bring our intelligence to the advisor market. Consensus funds are a new range of funds that have been almost 10 years in the making. There are a number of trends that have been ongoing in the marketplace for the best part of a decade, and we've seen these manifest themselves initially in the pension market. Advisors have become much more comfortable using index funds as part of a core allocation in their portfolios as they build out default product solutions for clients in that small to medium-sized pension arena. Moreover, that's been aligned with retail houses such as ourselves building out a much broader choice of passive index solutions.
One of the consequences of RDR will be that from a consumer perspective, people need a way of getting cost-efficient, multi-asset exposure, so getting that breadth of diversification in one single fund. And from an advisor point of view, they need a way of being able to quickly find one fund that allows them really to outsource that job of putting together a broad asset allocation portfolio.
Clients are much more aware. Rising tides lift all boats. At the moment, markets are a bit sideways. Clients do look at charges, particularly when you're going through a specific tariff with them, so you're focusing in on it. So I think there is more use of passive going on.
The low-cost passive strategy does significantly reduce the cost to the client, which means that the client outcomes are likely to be significantly better.
We do have a wealth of experience of multi-asset investing, and we're able to tap in and work with specialists across the different asset classes within Blackrock to really inform the decisions that we're taking. Both in terms of the building blocks, which are all proprietary, and the construction of those building blocks. I think Blackrock, it's really a leader and a pioneer in terms of passive management. The Consensus range of funds is a suite of 5 funds. They're all multi-asset funds with a real focus on diversification. We use an industry-wide sample of average positionings of professional investors to get a good sense of how the market's positioned and to ensure that we're reflecting the best thinking of the market. We found that clients have been able to use this as a very good core asset allocation. So if you like, a good foundational way of tapping into a breadth of asset classes.
We're not proposing these are used across the whole portfolio, but they form the core of a portfolio that allows an advisor to tilt it to make the risk-return profile appropriate to an individual investor. I kind of call it bespoke off the shelf.
The Consensus funds provide that breadth. They're a good tool for people to stay invested and to really think about their risk appetite and what sort of level of investment they want to take, and actually to be flexible. So if you want to move your risk appetite over time, you can select a more aggressive or a less aggressive fund.
For us, passive investments is about taking out risk at manager level. You can't take out risk at market level.
Alongside the Consensus funds, Blackrock has launched a second major initiative with its online advisor centre.
With the Advisor Centre, we're aiming to help our clients adjust to this transparent fee-based model and also to provide them with tools to help change and transition their business models to the new world.
I look forward to RDR coming up with a more productive relationship with providers.
They are really focused through to the end client with the intermediary. So I think more of that, please. I think that's great for the industry.
One of the main concerns are some of the unintended consequences of RDR, where huge swathes of the population either can't or won't pay for advice. Taken together, these provide advisors with the tools to be able to engage with a much broader range of clients.